Hey, it's Brent of the Brent and Brenda Real Estate team, back today, and with me is Patrick Ritchie. I brought Patrick in today because I just sat down and hit with him recently, and we talked a little bit about the credit scores. And I think there's a lot of confusion out there. What's a good credit score? What's the difference between a credit score, this to that? How much money does that maybe save me over the course of a loan? And I think Patrick would be a great resource to answer some of those questions for you. So first off, thank you very much for coming in.
No problem. Thanks for having me.
Yeah. Let's talk a little bit about keys to getting a good credit score. I mean, there's probably some obvious things: paying your things on time, paying your bills on time. But what about some of the other things that maybe the average consumer doesn't think about?
Yeah, and the main thing, I mean, obviously, 35% is paying on time, and our definition of paying on time is paying within 30 days of the due date. So that's the obvious answer.
Right.
Now, the not so obvious answer that I see, what trips up consumers the most, is what's called credit utilization, and that's based on your balance as a ratio of your available limit on your credit cards. And that's almost as important as paying on time. So in what FICO puts out in terms of the factors that determine the FICO score, 35% is paying on time, 30% is debt level. So that credit utilization can have a huge impact. And I've seen people knock their score down 50 to 100 points just by maxing out credit cards. So ideally, we want to keep our credit card balances under 50%, always knowing lower is better. So if I can keep it under 10%, that's going to be ideal. If I have it down to zero, if I know I'm going to be buying a house, I always tell my clients, if you know you're going to be buying a house in the next 90 days or so, get those credit card balances down to zero if you can.
Sure.
But I also say, I'd rather have somebody come and apply for a mortgage early and find out if they are eligible right now. They may be fine exactly the way they are, but if they're trying to get their credit score in better shape, that's going to get there the quickest in terms of paying down those credit card balances. But my caveat to that is cash is still important for the transaction. So I would hate to see somebody use all their cash to pay down credit card balances, and then we needed that cash for the approval. That's not necessarily going to be a good thing. So I guess the preference is, to talk about the situation first, but if the credit cards are maxed out, that could cause a problem. So.
Yeah, you bring up a great point. I think everybody's situation is pretty unique. So if you've got a phenomenal credit score, your terms aren't going to get any better. Maybe it doesn't make sense for you to pay down that credit card if you're looking to buy a house. So
exactly.
The key to prepping to buy a home is to kind of don't start. I'm ready to buy today. It's almost like you need to start a little bit in advance. So,
exactly.
Let's talk about somebody who maybe does not have that perfect credit score. I mean, the perfect credit score is 850, but really, you don't need an 850 to get the best terms.
Absolutely not. If you can get your credit score, your FICO score, to a 740 or higher, if you're between 740 and 850, and the highest I've ever seen on paper is an 841. Haven't seen an 850 yet. But if you're over a 740, you're always going to get the best terms. Now, if you're under 740, is it going to be a huge difference? It starts to add up. If I'm paying $14 more per month because I have a 710 instead of a 740, over 30 years, that's going to start adding up. It could be over $5,000. So every little bit does count. It makes it easier. So the goal should always be 740. Now that's primarily on a conventional loan. If I'm using FHA or VA, my goal needs to be 680 or above. If I'm at a 680 or above, I should get the same rate as anybody who's above 680. Yeah, that's on FHA and VA. So it does make a difference. Now where you start to see a problem is when people get under 680, especially when people get down to the 620 range. I had a guy the other day, he's got 625, so he's paying a higher interest rate as a result, but also it's a situation where what if his score were to go down before he found a house? Because the credit reports are generally good for 90 days to 120 days, and they expire. So if he did something that knocked his score down before his credit report would expire, then at that point he wouldn't necessarily be able to buy a house. Now I had somebody who was looking at their credit. They had a lot of medical collections, which are very common, and really the damage in their situation was already done. Any hit to the credit scores had already happened because they had a handful of medical collections on there. Now where they were at, they were down in that 620, 630 range. They were going to be approved, it was going to be fine, but what we needed to make sure of was to make sure that no new collections were going to show up. So my advice to them was, if there's anything else out there that could show up in this credit report, get that paid before it shows up on the credit report and knocks your score down. If you get below a 620, you're going to be very hard pressed to find a lender who's going to be able to do that mortgage for you until you get back above 620.
Yeah.
So that's an important thing. Make sure nothing further comes on if there's already some damage.
Yeah, absolutely. And I think Patrick brings up some good points. I mean, you talked about, if you're going to do conventional financing, 740 is a great score. If you're going to do FHA, VA financing, which is really popular right now, you really have to get to that 680 mark. FHA financing, 3.5% down payment. VA financing is actually 0% down payment and no mortgage insurance.
And I think on a $200,000 loan amount, if you're a veteran, congratulations, because you're going to save about $200 a month on mortgage insurance. That's great.
$200 a month over the course of 30 years.
Yeah.
A lot of money. So anyway, also author Patrick Ritchie.
Yeah.
Credit Roadmap.
The Credit Roadmap.
If you'd like to get a copy of the book, how do they get in touch with you? And if they have questions about books or questions about credit or questions about buying a home, how do they contact
you? I can always be emailed at patrick@thecreditroadmap.com is the email address that you can always reach me at. I'm always available to answer questions. For mortgage questions, you can call me on my cell phone. That's 480-203-4641. And if you're a client of mine, if you're a client of Brent's, you get a free copy of the book. So just give us a call, send us an email. We'll get you a copy of the book. It'll teach you everything you need to know about credit.
Fantastic. Well, listen, thanks for coming in. Appreciate your time. As always, if you have further questions, we always ask you to visit us online at www.brentandbrenda.com or give us a call, 602-380-2049 for more information.